Today I'm spending time with George Mihalopoulos from Connected Finance, and today we're going to learn about the fastest way to reduce interest rates on your existing home loan, something everyone wants to know.
Definitely.
George, how often do you think clients should review their home or investment loan options?
Monique, obviously everyone's going to have different goals, different priorities in their life, especially regarding their home loan, but I think it's a really good idea every 2 to 3 years for clients to review their home loan. Is it working well for them? Is it achieving what they want it to achieve? How competitive it is in the marketplace? Is there some other products, interest rates that are available that could possibly help them save interest? So as a sort of rule of thumb, maybe 2 to 3 years.
Yeah. Look, you know, I think I'm guilty of feeling like that you're happy with your lender and you just stay there for years and years, but I guess that's actually not the way we should be doing it. So if a client is comfortable with their existing lender, like I just said, and initially doesn't want to consider refinancing options, how can they reduce their interest rate?
It's a great question because, as you said, a lot of clients are just complacent. You know, the initial goal of buying a property is all they think about, and when they finally get there, you know, other things in everyone's life take over, and the home loan sort of becomes second priority. I do look at a number of refinance options every week for all my clients because you know, everyone's after the best deal. So interest rate wise, fee wise, package wise, and therefore what sort of takes place is they want that best deal with their existing lender. You know, sometimes people don't have the time to invest to look at refinance options. So I'd often present to a refinance customer the easiest way for them to reduce their home loan is to talk to their existing bank. Sounds pretty simple, but a lot of the time their existing lenders don't necessarily provide them with the best deal up front. So asking that simple question of, can you offer me a better package? Can you offer me better pricing, better interest rates? Can actually go a long way.
Now, if the client does contact their lender and asks for an interest rate review and a reduction and they're not satisfied with the outcome, then what should they do?
It's an easy one. They can call me. They look, ultimately, the best thing to really do is get an idea of what their lender can provide. Typically, each lender will have a retention team, and that's a team you know, has a specific aim of retaining your existing business. So therefore, typically they'll offer you a price reduction. If they don't, or if they offer you a price reduction you're not happy with, they can contact myself, or obviously contact any lender they choose to. I can provide them with complete product comparison, so they've got an understanding of how their current offer with their existing lender sits with regards to offers in the marketplace.
Good advice. If clients want to call their existing lender for an interest rate review, however, also wanted to understand what other options are outside their lenders and their potential savings, then what do they need to do?
Look, again, you know, very similar answer where I can provide them with a complete product comparison, give them a great understanding of what the offers are in the market, product information, rate information, fee information over the life of the loan, to really give them that information to make an informed decision on what is the best deal for them. You know, I actually present them with the actual benefits. What are going to be the savings, short term and long term, making sure it's the right thing for them. You know, if it's not the right thing for them, I'll definitely advise them accordingly. But most of the time, I can offer them some really decent, substantial savings. But again, it's just a product comparison. It's a simple 10-minute phone call with me over the phone, and then I can schedule an appointment to discuss it in further detail.
So simply, folks, I think your first option is to go back to who your existing lender is, speak with them, and if you're not happy, I'd be contacting George. Thanks.